Christopher Wheaton is a fund manager at RCM. He's with me now. Chris, I mean, is this a game changer, shale gas?
It certainly is a game changer for lots of the resource bases of the big major oil companies, who I think could be real beneficiaries from this trend over time. What's happened in the last 5 years is that technology has really been able to, quite literally, unlock these buried resources underground. And what this also shows is that this is a manufacturing business, not a production business. So it's very much about...
Walk us through that exactly. What do you mean by that?
Well, I think it's one of the big trends of 21st century oil, being an oil manufacturer rather than a producer. It's about doing the same thing over and over again, really well, at a low cost. So just like your typical, say, car manufacturer or something like that. The difference here is that the techniques of drilling long horizontal wells, thousands of feet underground, have improved dramatically. So accuracy and also length of well has dramatically improved. So you can get a lot more well hole into the reservoir to get at the resource. Secondly, it's also about being able to fracture what's a very tight, very impermeable, hard reservoir rock, be able to break that open, get access to the gas inside, and that's what's going to make the gas flow, and therefore how you turn an uncommercial resource into what's very much a commercial resource and unlock it globally.
And it will become cheaper over time as the technology improves.
It's very clear to see that you've got what I'd call experience curves, or what the companies will call, lower unit costs, significantly improving over time in terms of maybe even as much as 20% quarter on quarter. It's that sort of level of technological gain we've seen, certainly in some areas of the US.
We discussed that ExxonMobil, of course, has a huge investment in shale gas. What about the other companies out there, the likes of the Shells of this world, or the BPs, or the Totals even?
There's a lot of interest all over the big oil space in unconventional gas resources. And it's not just shale gas, but it's also things, for example, like coal bed methane, which is a similar, though slightly different resource base to access. All these companies, BP and Shell, for example, have got significant US natural gas, unconventional natural gas resources already. They've spent money on those acquisitions in the past. For example, Shell spent $4 billion in Canada very recently, and will continue to roll out that resource exploitation.
Christopher, I've got to just leap in there and talk to you about BP very briefly here. Earnings out, the shares under pressure, on the way down. Well, investors not liking this. What about you?
Well, I think they have disappointed relative to some reasonably high expectations that the company had coming into these results. I think what's really disappointed is the two things. Firstly, the extent of the poor trading in the downstream, in the refining business, which really has struggled in the last 3 months. On turnover of in excess of $62 billion, that's $1 billion, it made just $15 million of operating profit, and they've had to write off the 2 West Coast refineries they acquired when they bought Arco back in 2000.
Thank you very much indeed for that. Christopher Wheaton from RCM just